did you? Anything you want.
Central bank's gold buying spree reaches 50-year high. What do the central banks know that the mom-and-pop stock market buyers don't? From Arrowhedge, gold is poised to close out January with a fourth straight monthly gain. FTR The Fed's uber dovish flip-flop seemed to signal that it's done raising interest rates reportedly for a while, but that's never happened before, which has hurt the dollar, helping gold to its 6th January gains in a row as investors sought a haven against slowing growth and U.S.-China trade disputes. While short interest in GLD gold ETF has soared along with price, Bloomberg survey results show a decidedly positive bias on the precious metal. Bullish, 13-yearish, 2 neutral, 2. If the Fed's rate hike cycle really has come to an end for now, the sooner-than-expected dollar weakness may help gold to rise more quickly and more sharply, Commerzbank said in a note. Off the tone and language of the Fed statement and presser appeared more accommodative versus consensus expectations, Citigroup Incorporated analysts including Akash Doshi wrote in a note. Take advantage of an ongoing gold market rally, investors might consider positioning for upside. Gold is benefiting from a lowered dollar in general, as well as safe haven buyers hedging against the outcome of the U.S.-China trade talks, Jeffrey Halley, senior market analyst at Aida Corporation in Singapore, said in a note. Still, there's no guarantee gold will keep appreciating at the same pace. Ole Hansen, head of commodities strategy at Saxa Bank, said by email. While the bank maintains a bullish view on gold, caution may now be warranted, he said. With stocks rallying and emerging market assets receiving a boost, the buy gold story has faded, at least for now, Hansen said. And as BCS Global Market said in a note, big range in analysts' outlook for gold this year shows there is actually no consensus. However, there is one group of global investors who are waving in those bullion trucks with both hands and feet, the world's central banks. Central banks bought last year the most gold in 47 years, it's 651.5 tons, 74% higher year. This is the highest level of annual net purchases since the suspension of dollar convertibility into gold in 1971. Additionally, Bloomberg's Javier Blas notes the 2018 gold buying spree by central banks isn't just the biggest in 47 years, but also the second highest annual total on record, only surpassed by 1967, when central bank gold reserves increased by 1,404 tons. Geopolitical and economic uncertainty throughout the year increasingly drove central banks to diversify their reserves and refocus their attention on the principal objective of investing in safe and liquid assets, said the World Gold Council report released on Thursday. Strong central bank and consumer demand offset ETF outflows. More central banks look to gold. Russia, Kazakhstan and Turkey again accounted for a large portion of demand in 2018. But their share fell to 58% from 94% in 2017, as other central banks chose to significantly increase their gold reserves, reinforcing the importance of gold as a reserve asset. Notably, European central banks also bought gold last year. Hungary made one of the largest purchases, increasing its gold reserves tenfold in October, to 31.5 t. This is the highest level for nearly 30 years. The central bank cited gold's role as a hedge against future structural changes in the international financial system, as well as its lack of counterparty or credit risk, as reasons for the purchase. Similarly, Poland was another European central bank which bought last year. Gold reserves rose by 25.7 t during 2018, plus 25% YoY. Indian net purchases were another notable component of central bank demand in 2018. Monthly purchases began in March and picked up in the second half of the year. In total, gold reserves rose by 40.5 t, the highest annual growth since the purchase of 200 t from the International Monetary Fund in 2009.5 and its annual report 2017 to 2018. The bank stated, diversification of India's foreign currency assets (FCA) continued during the year, with attention being ascribed to risk management, including cybersecurity risk. The gold portfolio has also been activated. Mongolia announced that it had bought 22 t of gold in 2018, in line with its stated target. This represented a 10% increase on 2017 purchases. One of the drivers of this growth was a 5-month National Gold to the Fund of Treasures campaign, which encouraged miners and individuals to sell their gold to the central bank. 6. In September, The Central Bank of Iraq stated that it had taken advantage of lower gold prices to buy 6.5 T. This was the first annual increase since 2014 and took total gold reserves to 96.3 T, accounting for 6.7% of total reserves. The State Oil Fund of Azerbaijan SOFAZ also re-entered the market last year. Gold reserves grew by 14.3 T by the end Q3, an increase of nearly 50% from end 2017.7. Having been on the sidelines of the gold market since the end of 2013, this marked a change in policy for the fund. In December 2018, President Ilham Aliyev approved updated investment guidelines that would allow OFAZ to invest up to 10% of its portfolio in gold. Currently, gold accounts for 4.3% of SOFAZ's portfolio,